analysis and its applications with you as I can. So let's move towards the 3-minute time frame. So we are set, and this is the 3-minute time frame of the index. Now, this week has not been great from momentum perspective, or rather, the momentum has been great, but not in the desired direction for swing traders. Market has been in terrible correction. And honestly, when the market broke above my target of 26,150, it kind of threw me off my game because I took it for granted that the momentum was going to continue and I remained invested in the market. So in the due course of next 2-3 days, almost all of my stop losses got triggered. And right now I'm sitting on 70 to 80% cash, looking for an opportunity to reinvest that money in the market. So what's happening on the 3-minute time frame of Nifty? First of all, this correction that started from the level of 26,250, this correction did not give us much indication. If you look at the momentum indicator, sure, it gave some negative divergence, but nothing very convincing out here. Eventually, as the 26,250 level gave up, we saw the RSI of the 3-minute time frame move to the support level of 40. And then from next day onwards, when 26,100 got breached again, that is when the downtrend began. Now, this was going to be a pretty extended correction. The indication of that came on the 3-minute time frame when the level of 30 got breached. And if you see historically, the last time the level of 30 was breached was exactly here on the 4th of September. Level of 30 was breached, a small pullback came, but the correction definitely continued. And you can see from this call out note, it went down to 38% that time. So coming back to the present trend, if we take a quick measure of this, we can see that the Nifty has corrected about 5%, which is pretty standard in an intermittent correction on the index. Moving to the 15-minute time frame. So whenever there is a correction, it has to be tied to a rally, because in an uptrend, we know correction is a part and parcel of the uptrend. But in an uptrend, the correction has to be tied to an unfolding rally. So for instance, here you're seeing this call out note in blue, which means that this correction is the correction to this rally, right, which was a smaller rally on the 15-minute time frame, more pronounced on the 15-minute time frame. This was corrected by 62%. Then this was a slightly bigger correction on the 75-minute time frame. That's why in orange, I have marked the call out of 38% correction. Now, this entire 5-wave correction that is unfolded, this so far has been corrected by 50%. So far, nothing to worry, because 38 or 50%, as you can see, are very normal correctionary phases. And my analysis also suggests that we've started off with a new trend. So this is a very normal correction. We'll talk about that in just a second. Let's look at the momentum indicator on the 15-minute chart first. What are we seeing here? So this correction, when it started, or this rally, when it started off over here, it started off with a pretty pronounced positive divergence and went up. Here, when this positive divergence, when this rally ended here, there was no indication on the 15-minute time frame whatsoever, which to me is an indication that this correction is very temporary in nature. We can expect the market to turn bullish as early as next week if there is nothing on a global level coming in, because this rally, this correction was also at the end of the day triggered by a major negative global news. So here, the momentum on the 15-minute is suggesting that more upside can definitely and should be expected once this weakness is over. Coming to the 75-minute time frame, again, the momentum was very strong all the way up to the peak. So this is actually a knee-jerk reaction to the global news that has come in. Technically did not have a lot of indications on the charts. And when you're a technical based swing trader, this will happen sometime or the other, that fundamentally or on a macroeconomic level, something is going to come in which is going to throw you off your game. And that is exactly why risk management is so important, because even when you do everything right, there will be something that is going to come and throw you a curveball. So that's that. Now, what are we seeing here? This entire rally, roughly, I would say the 5th of August, all the way to the 27th of September. This entire leg of rally is what is under correction, and 50% of that has been corrected. 25,100 was the support level that I was looking out for, right? That has been reached. Now, a momentum peak exists, but that is like really, really far. I do not see personally the index taking that big of a correction. But If it does, then that would basically mean that this entire new rally is under correction, which I don't think is very unlikely right now, because my Elliott wave count suggests that 5 waves have probably not been completed. But again, I have a theory that maybe this is the point where, alternative count rather, this is the point where the first wave unfolded. If we ignore this election day volatility, this was the first wave, this was the third wave, and this was the fifth wave. If that is the case, then you can expect a deeper correction here, which would take us to 38 to 50% and potentially test the 100 EMA, which would mean that the correction that we've seen so far is only halfway through. So these are my two theories. And according to me, 25,100 is a very, very important support level here. Now, on the 75-minute time frame, if you see, the level of 30 has already been touched. I do not want the RSI to spend more time in the below 40 level, because then again, that would indicate a range shift, a negative range shift. Here, what you saw was that RSI just touched the level of 30, bounced back, and started rallying again. So we are going to observe in the next week what happens, whether 25,100 sustains or if it breaks. If it breaks, then that would be an indication that we are most likely seeing correction of this rally, which started from 10th of May onwards. So this entire rally was a 20% rally. And if this goes into correction, the first support would be 24,450. The second support would be 23,933. Let's mark those levels. So, and then the next one is, let's put this as 900, 23,900. Yeah? So these are the support levels that we are basically looking out for on the index. Now, as you might have noticed that my narrative or my analysis is not very concrete today, the reason is that charts are not giving very concrete signals. So like I said, I'm sitting on 70% cash and I'm going to maintain that. So 30% that I'm invested in, those are stocks that I'm holding for the long term. So on the daily time frame, if you look at the candlestick formations, this is indicating a little more bearishness than the 75 or the 15, which is not good, because the upper wick here is way longer. What does long upper wick mean? Means the selling pressure is very, very intense, right? That is what we are seeing here, very intense selling pressure. And it does look like next week we can expect more downside activity. The daily time frame is also saying that this is a very knee-jerk reaction to global news, because even on the daily time frame, a new high on the RSI was forged. So there was RSI negative divergence up to the peak of 25,350. So that's with Nifty analysis. Now let's move on to our sectoral indices. So we'll start off with the Bank Nifty, and I have the daily chart of Bank Nifty here. So Bank Nifty, what we are seeing is that it rallied all the way to our trend line, almost all the way to our trend line, and then since then has been declining pretty sharply. Even on the 75-minute time frame, it gave a pretty good rally here after forming like a double bottom. A new high has been established. 75-minute time frame again did not give us much indication. In fact, this started to look like the beginning of a positive range shift, but did not sustain whatsoever. 15-minute time frame has become very negative. The 15-minute time frame on the Bank Nifty did give us an indication of this correction coming in with a negative divergence. 62% correction here, 38. Let's remove this. And I think, again, the rally that is under correction is this entire rally. And here we can already see 62% correction has been reached. Now, the Bank Nifty has a tendency of consistently testing the 100 EMA pretty much every time it takes a correction. So 51,000 is my minimum test level for Bank Nifty. And I would personally steer clear of the banking sector for now. PSU has not been looking good on the weekly time frame for a while now, and the correction over here that we can see is coming very close to testing the 4th of June bottom. If you look at the daily time frame, again there is structural breakdown, negative divergence, and breach of the bull range here, so not good. Going lower, 75-minute time frame is in a upper negative range. 100 EMA, as we can see, has already been breached and in fact is acting as resistance. Again, not a good indication. PSU banks, I think you should not really hurry in making a position here. It has given a little bit of upside, but I don't think this is going to sustain, and more downside should be expected in PSU Bank. Next, let's take a look at auto sector. I think is running out of momentum. It has started to show signs of exhaustion. Also, if you look at the daily time frame, it has been forming a negative divergence. Now, after a long time, it kind of also broke down a little bit below this level of 60 here. So there is like double negative divergence here. We will need to see whether it sustains the 100 EMA. If it breaks this green line, which is the 100 EMA, that is not going to be good for the auto sector. On the stocks part, a very sharp rally has definitely unfolded, but it is giving signs of exhaustion. If you take fresh positions now, I would do it for very small targets of maybe 5 to 8%, not more than that. If you want to invest for a slightly longer term, then I don't think auto sector is where you should look for opportunities. Commodity sector, there's a massive negative divergence and exhaustion signals coming in here. So after the exhaustion signals come in, the rallies that follow are typically very difficult to trade. They have a tricky entry and exit points. So it's better to avoid. CNX commodity is also not something that we are going to give a lot of attention to. There is something that I want to check. Yeah, so last week we had assessed that the auto sector was very bullish. This week, I don't think it is looking that bullish. So I'm going to move this to sort of bullish, right? Let's see consumption sector. I had said that I wouldn't take immediate position because it was right at the top. Wait for a correction. So we can see consumption sector has given a massive correction. And there was also a clear-cut negative divergence on the consumption sector 75-minute time frame. So this correction is actually one of the biggest corrections the index has seen in like last 3 to 4 months. And I don't think it is done yet. I would want to personally see the consumption sector also come down to the 100 EMA and give it a test. In this correction, the consumption sector does indicate that more correction is probable in the market. So let me remove this and let me set this alert on the 20 DEMA. The price crossing 1 day 20 EMA. I want an alert once per bar. So that's good. Let's move on to the next one, which is CNX Energy. So again, last week, not outright bullish CNX Energy, and we can see massive correction unfolding here. There was a negative, no, that's not a negative divergence, but 75. So the daily time frame was indicating a potential range shift, and I think more correction can be expected in the energy sector. My first target for the energy sector is around 39,700. Now moving on to CNX Finance. I think the nature of the rally was very unpredictable and very erratic. It made trading very difficult. And now this correction that is unfolded, I personally expect this correction to extend a little bit more for sure. Down to this trend line, which would be another 2 to 3% correction in the index at the least, is what I would expect on CNX Finance. FMCG has been showing negative divergence, but considering that the market has turned pretty volatile, pretty correctionary, FMCG might be a place where we want to look for opportunities once the level of 30 is tested, and on the 15-minute time frame, once it forges a higher high on the RSI. So once the RSI is back above the level of 50 on FMCG, then on the 15-minute time frame of 25 period, then I will come back to look for opportunities on the FMCG sector. Ooh, interesting. Very big positive divergence on the infra stock index. Infra we had mentioned was sort of bullish, but I think I want to move it to the bullish now because just based on the 15-minute time frame, well, the last time it gave a positive divergence on the 15-minute time frame, last 2 times it did give a pretty attractive rally of 5%. 5% rally on the index would convert to at least a 15% rally on the stocks. Stocks if you're choosing, right? So I had actually identified the opportunity in the stock Sobha somewhere around here. Then that rally came really, really fast. And then we tried to take another position, but got stopped out. So what I'm going to do is I'm going to explore opportunity in Sobha once again. And I'm also going to set an alert here. If the index moves above this, in that case, I will go ahead and pull the trigger and take my position. However, my target expectation is not going to be very high. I am going to expect at max this gap to get filled, but not more than that for the time being, right? Reason is that the daily time frame is not very bullish for CNX Infra and is itching for a bit more correction than what we are seeing right now. Irrespective of that, I think the underlying bull trend is very strong on the CNX Infra, and even if it does give a considerable correction, right? If it breaks the 100 EMA, then I'm going to refrain from long-term position. Short-term trading continues to remain attractive because infra sector has a very strong trending personality, which makes trading very attractive in this sector. IT. So I can see a negative divergence on the daily time frame had formed. So IT sector, actually we called it bullish, but it did not give any bullish move in the last week. 75-minute time frame is showing some negative range shift. So here it was a negative range. Then here it gave a positive divergence. Here it remained positive for some time, but again it's given a negative range, kind of a negative range shift. And here I think we should expect some downward activity in CNX IT. So I think I am going to actually avoid the IT sector this week. Moving on, media, not worth the time. Metal. So metal sector we had mentioned was bullish, and clearly it gave fabulous rally. In fact, the metal sector is showing amazing resilience. So if the market can stop declining the way it is declining, I think the metal sector is where we can see some good bounce back, lead the market recovery. So keep an eye out on metal stocks. Next, let's look at pharma. So pharma also we said was bullish, and we actually made some good money in Granules that we'll be looking at after the analysis of all sectors. So pharma stocks. So here there is a tiny little structure breakdown. I think I'm done with my profit booking, and for now I'm going to stay clear of the pharma sector because I think it has already rallied quite a bit and it probably wants to take a little more correction here. So I'm going to wait for that correction to come in the index and then maybe assess for fresh entries once the correction is over. And if you see the past 2 times when the pharma sector went into correction, its corrections are more consolidating in nature, right? So that is what I would expect here, increased consolidation activity in the sector. Public sector enterprises. So I have been warning you about public sector enterprises for a while, and I will continue to stick to that narrative. I think there is a structure breakdown in public sector enterprises and they can go into correction. So if you're holding on to like railway stocks or other public sector enterprise companies, you want to be very, very careful. Realty, again, realty is also showing a massive negative divergence here. And I was expecting a short-term rally, but that did not really come through. So I'm going to remove rally from the bullish list to the not outright bullish list, and probably going to avoid the sector for some time. And that's it. All right, let's now take a look at the intersector chart. We've looked at the individual sector chart so far. So this is the intersector chart, and what I can see on this intersector chart, let's make this small. Let's change this to 75. Let's remove this. Right now, everybody can see this chart. So what I can see is that since last Friday, the metal sector has outperformed the market. Realty has absolutely underperformed the market. And realty sector, we are getting the sense that it has a tendency to do this a lot. It gives massive corrections. It gives massive corrections whenever the market turns negative, which means that for short-term traders, you have to be careful. Like upsides countered by big downsides can mean that if you don't have strong risk management strategies in place, your capital can experience erosion really quickly. PSU banks, since the last Thursday, have done slightly better than the private sector banks, but I don't think this is something sustainable. CNX Pharma and healthcare have also sustained themselves, but I am expecting more correction in all of these sectors, including the IT, infra sector, consumption sector. So consumption and FMCG as defensive, you might want to look out for opportunities there. Energy is not looking attractive. Auto sector, I think, is heading into some exhaustion. So more rapid correction might be experienced there, but at least, or maybe lack of rally or upside activity. So I wouldn't recommend making a lot of long positions in the auto sector right away. So we'll take a look at the first stock analysis request that we've received for the stock of HFCL. So this is the chart of HFCL, and what I can see here is that HFCL has already given a massive rally of almost 100% in just 3 months. Now it's heading into correction. The RSI on the daily time frame is heading lower, and if you look at the 75-minute time frame, it's shown a negative divergence, right, which is a tendency of the stock to do very often. Here, the positive range was breached, and then the stock went into massive correction after giving a negative divergence indicator. And then, after a lot of volatile movement, the stock also went into rapid rally. So the underlying trajectory of the stock is quite bullish, but I would not recommend you to make a fresh position here whatsoever. In fact, I will set an alert at the level of 30 here. All right, so Rishabh is asking, so he's bought the stock at around 151, but it has declined quite a bit. See, the stock is definitely in correctionary mode, so don't expect a new lifetime high anytime soon in the stock, but it can give you an opportunity to get out at a smaller loss than it is giving you right now. So come next week, I expect a 5% bounce up in the stock around. I expect the stock to test around the level of 148. That would be a good time for you to get out of the stock with minimal loss. Also, the 15-minute time frame corroborates this view because there's a small positive divergence here, which can indicate a tiny little bounce back. In the previous correction, if you see after the sharp rally, here also a small positive divergence was created by the stock, after which a bit of a rally did come. So you should be able to exit your position in the next 4-5 days. I wouldn't encourage you to expect a big rally like this one that unfolded here. Basically, this 20 EMA, right? This 20 EMA is where I would expect some test to happen. So as the recovery unfolds, I would suggest you keep trailing your stop loss so that if and when the stock starts to turn back down, then you should exit. See, your risk to reward ratio is very, very unattractive. So look out for exiting the position from a short-term perspective right away. If you're holding the stock from a long-term perspective, it would have been different. I would have suggested you to continue to hold. And here I am expecting the stock to test around the 50% retracement level, that is around 120 rupees. There I would have expected or asked you to average out your holdings, but not right away. Let's move on to the next stock analysis request by Pranay on the stock Kirloskar. Kirloskar Brothers Limited. I've not had a chance to assess the stock for a long time. So let's start with understanding how the trend trajectory is unfolding. So after having drawn the maiden trend line, I'll just use the control key to clone that. Underlying trend is definitely very strong, and the correction that we're experiencing here is temporary in nature. But let's go forward and assess the stock's tendency in terms of correctionary pullbacks. This was a nice little 62% pullback, and then the stock again started to rally. Typically, what I've seen is that the first rally of an underlying uptrend tends to correct deeper, and then subsequently the level of correction reduces. That is exactly what we are assessing here. The first one was 62, and second one was around 38 to 50%, which is very typical. And then this is the very next rally that has unfolded. So this was actually a pretty massive correction. So I would say this correction was more like the correction of the entire. This should actually be 38%, right? And wave 3 is what I was trying to mark. I think this was a wave 3. This very evidently looks like the wave 3. It has a lot of characteristics of wave 3. This was only corrected by 24%. So what I'm going to do is I'm going to keep these two in yellow and I'm change this to white to indicate that this is the correction of a higher time frame or a weekly time frame. So then after that, the stock went into consolidation. And here it started to rally again. The first rally was again just like last time, corrected 62% on the daily, so that'll be a yellow. And then again it started to rally from that base up to here. I would say very shallow sideways consolidation, giving the idea that the underlying momentum is super strong here. And then the next and the final rally. So now I am actually expecting this entire rally to unfold into a correction. So here, since I would expect a small bounce up to this trend line maybe, or actually I think the small bounce might have already come up, but a little bit more can be expected to the level of 2045. So 1857 is your entry price. So you've actually given up on a lot of gain. So holding it for short-term swing trade, so you should have booked your profits, right? Or set a stop loss. You clearly did not do that. There is no reason why you should have continued to hold on to the stock when it broke below this level. And on the daily chart, it also created a doji, which was very, very telltale for you. It might go into correction. So you should have set your stop loss around the level of 2300. But anyway, let's look at the 75-minute time frame also. So 75-minute time frame or so 75-minute time frame has again turned bullish. So some more upside activity should be expected. I think in the next week it can give maybe 10-15% upside. That is when you should choose to exit this stock for now, because like I said, this major uptrend might experience correction, and you should expect anywhere between 38 to 50% correction to unfold here. So you don't want to be holding on to the stock for that correction, right? As a short-term swing trader, your objective should always be to be on the right side of the trend. Right now, you're on the wrong side of the trend. So that's my 2 cents to you. Okay. Now let's take a look at Granules. So we did a short, very small little swing trade over here. We entered the stock right here at the base after this massive correction of 25% based on the RSI positive divergence that was forged here. So we saw the positive divergence. We made an entry with a tight stop loss that got exited. When I saw that the stock was retesting the low level and the positive divergence was still persistent, we again re-entered as marked, as indicated by this white pin. And then the stock rallied around 12%. Actually, it rallied around 13% while we held in the next 7 days. But then when I saw the overall market break down structure and start giving correction, that is when we booked the profit. And in just a matter of 7 days, we were able to book around 11% profits in this stock. If you look at the volume activity, and the massive correction was unfolding here, that time the volume had picked up quite a bit up to this point. But then rest of the wiggle movement, there we do not see a lot of volume activity. In fact, the volume did start picking up after when the price started to move up, and that subtle pickup in price was also visible in this part. If you look at this histogram over here, so this was our indication that potentially we can expect a rally. Now, I should have waited for the pullback to the base, but I did not do that because I thought the 100 EMA was crossed and it would sustain. So right now what you can see is 100 EMA has been tested and the stock is showing resilience again. So now I'm waiting for slightly more confirmations to actually re-enter Granules, because I think it has juice to continue the rally upward. That outlook is actually coming from the daily time frame. So if you see this entire rally, it has been tested. This entire rally has been retraced 50% over here. And if you look at the past markings that I've done, the stock has a tendency to give repeated 50% retracements and continue rally upward, right? So now we've made money on one part of the rally. It has given a correction. So let's also measure on the 15-minute time frame how much of this little boy has been corrected. 62%, exactly 62%. So that actually is very good. You know why? Because we can now make a position. Now that 50% has been breached upward, we can now make an immediate position with this as a stop loss right here, with this low as a stop loss. If it gets breached, we get out of the position. If it doesn't get breached, then we have another 10% to play for in the next 1 week or maximum 2 weeks. So this will be a very short-term trade. And this is a stock that I've chosen to play swings in the next few weeks. The reason being that underlying trend is very, very strong. And it's always better to be on the right side of the trend and still be wrong than be on the wrong side and be wrong. Because when you're wrong on the wrong side of the trend, the cost of that is a lot higher. We don't want to incur that, right? So with that, we come to the end of today's session. Thank you so much for joining me today. If you learned anything or if you find this analysis beneficial, don't forget to give this video a thumbs up before you go and drop your comments. I would love to hear your thoughts, your feedbacks, and if you have any suggestions, feel free to share those in the comments as well. I will see you in the next Let's Get Technical episode, which will be in the mid of the week. If you have stock analysis requests, submit those. I'll be more than happy to assess them for you. If you don't have that, then I will be taking up some stocks from my past trade where I was able to make profits or where I had to book losses and walk you through the learnings that I am extracting from them. In the next Let's Get Technical series, I also want to give you a walkthrough of my RSQM model, my relative strength quant model, which has been getting a lot of attention since I posted a short reel on that. So that is what we're going to do in the next video. So if you're not already following me on YouTube, make sure that you do that because that is where I'll be posting that video. Thank you so much for joining.